Hello, this is me, Tom Television, exploring American cuisine. Let me continue introducing the United States stocks. This corner is about checking out industries that have been undervalued among United States stocks, but are now gaining attention as their stock prices are rising. So just because I introduced this company with a good stock price, it doesn't mean you should buy it right away. Though I introduced it then, it could drop further after. That can happen too. I rely on this data to determine where the current market is headed, but since data can change, my conclusions may also need to change. So when I look at the current data, I try to be as objective as possible and analyze where the market is going. I think that's the right approach. I review the list of stocks, and currently many YouTubers are reviewing today's rapidly rising stocks. It would be beneficial to refer to those channels too. The videos I mainly shoot are a bit retrospective and more on the analytical side. I focus on lesser-known industries or companies and aim to diversify across sectors and industries, as many stocks have already risen significantly or are influenced by market momentum. Today's featured company is called Nobonodis. Recently, pharmaceutical stocks haven't performed very well over the past year, but stocks like Novo Nordisk and BioNTech have managed to maintain their stock prices relatively well, even though many other stocks have been falling steadily. Even if they fall a little, they don't rebound dramatically, and it's not like they plummet either. They just keep going down slowly without any rebound, and that's what we see happening. Pharmaceutical and bio stocks have been like this recently. The market currently shows little interest in these stocks, but it can be beneficial to examine overlooked industries. Novo Nordisk, the company called Novo Nordisk, is probably a name many of you have heard of. The company is better known for its product Wegovy than its actual name. In the United States, it's an incredibly successful company in the obesity treatment market, and Wegovy has also entered Korea, being marketed and sold here as well. There continues to be news about these things, but because Wegovy is selling so well, in reality they can't produce enough to meet the demand, so sales are being restricted. That's the kind of sales situation we're seeing right now. Because of that, the stock price has risen quite a lot. Compared to the recent 52-week high, the stock price has continued to fall from a peak of $148, dropping by about 61%. That's a huge decline. With the current price at $57, if it returns to its original high, that would mean a 2 to 3 times increase in the stock price. That's the scale of recovery we're discussing. So now the stock price has dropped quite a lot, and it's entered a phase where it's not falling any further for the time being. I don't think it's going to go up sharply from here and rise right away like this. But I think we can at least confirm an upward trend and see a pattern where it can move sideways for a while. So for many of you, it would be good to take a look at how this Nobonodis will actually perform in the future. If you look at Woosung's company, it's truly Woosung's company. It's at 88 points, up by 4 points compared to last year. That's a huge increase. It's not just about the score being high, but the fact that the overall score is going up is what's really difficult. Why? Because you have to consistently maintain and improve that score. It was good before, but now it has to get even better. If you look here, a future growth score of 85 puts you in the top 1% among American growth companies. Financial stability at 80 points, profitability at 100 points. It's really good, that's what this means. Current asset output is 85 points and business uniqueness is 90 points. The product excels in all 5 categories, achieving a perfect score. It's truly outstanding. However, despite its exceptional quality, the stock price doesn't reflect this. That's what people are curious about now. So, is there a reason why it could be undervalued? If you look at it from this perspective, I think you'll see why. If you look at the growth rate, you can see that the performance has recently recovered like this. Many people have searched for these items on choice stock. If you examine them closely, you'll see they've been displayed similarly in the past. Clicking on an item will open a chart with more details. So if you look at the growth and profitability data for each section over the past year, you can see how the data has changed. By looking at the current price, you can see whether the trend is making this industry more attractive, or if it's the opposite and the numbers are getting worse. This will help you judge the industry more easily. The steel industry has experienced highly cyclical sales and profits historically, with significant fluctuations despite no particular issues. The forecast only reflects the stock price, which is slightly lower than anticipated. However, it's a unique situation. The operating profit rate is projected to be around 44%, which is considerably high. So, Even if you look at it conservatively, the company's profitability is evaluated as quite high. Unlike other industries, the difference between operating and net profit, known as the profit margin, is clearly shown in blue and green on the chart. There's about a 9 to 10% point gap, and usually that's a pretty big difference. It's rare to see such a large gap. The reason for this is that there used to be a lot of non-operating income. The reason why there was a lot of this recently is because there was a lot of foreign exchange gains. There was a loss in the first quarter, the second one. In the same case, it's called a guarantee. So if you sign a contract, there are companies that manufacture and provide those things as a guarantee. In order to acquire that company, they decided to acquire 3 production facilities for about $1.1 billion, and they plan to complete the acquisition by 2024. But isn't there a problem with monopoly or something like that? The approval was delayed, but in December 2024, the final approval was granted. So after the acquisition was completed, a lot of divisions were separated during the process of integrating the related funds, and many divisions were added. What happens if those divisions are separated? High interest expenses were recorded as operating losses, resulting in significant financial losses. If these losses are covered with borrowed money, interest expenses increase, potentially leading to an accumulation of debt over time. The main business is performing well with a good operating profit. The losses are primarily from high interest expenses outside the main business. Reducing and paying off borrowings can improve the operating profit further. Profitability could potentially improve further. If you look at the current ratio chart, in this chart, the line above 0 is called plus, and the line below is minus. That's how the chart is drawn. Typically, operating activities are positive, while investing and financing activities are negative. To interpret a cash flow statement, look for this pattern: operating plus investing, core and financing. So basically, this company Nobonodis and Nordisk also have positive cash flow from operating activities. If you look at the financing and investing activities now, they're both in the minus, right? That's correct. The reason investment activities are decreasing like this, if you look here on the screen, you can see the investment activities are decreasing. The reason for this decrease in investment activities is because the company is investing money for growth. For example, acquiring a cafe franchise or other companies. When this happens, the company spends money but in return gains the facilities or assets of that company. That's what it means to acquire a company. Money also flows out as investments when you invest outside the company. On a cash flow statement, money going out is recorded as a minus, while money coming in is recorded as a plus. The company made significant investments for growth, but if you use your own money to invest, it shows up as a cash outflow in operating activities, or if you raise money, it shows up as a cash inflow in financing activities, like issuing stocks or taking out loans.
Or by borrowing from a bank.
The company's financial data shows mostly negative numbers indicated in blue. They raised funds externally, such as through loans. That's how to interpret it. So that's why the things we mentioned earlier, like the capital increase, were necessary. So on the financial statements, the increase in borrowings and liabilities shows up, and on the cash flow statement, it's recorded as cash inflow from financing activities. To summarize, these parts might be reflected in the next period or the one after. If borrowings keep increasing, this part could be delayed, which is what I expect. So there are no issues on the cash flow statement either. You can look at it this way. Now let's compare the expected and actual results. The stock's earnings per share chart shows that this stock ultimately follows its earnings per share, as the saying goes. The green line represents the expected performance, while the orange line shows the actual performance. For the first 3 years, the expected and actual results have aligned closely. But compared to that, the stock price has dropped much more than the decline in earnings, falling from $130 to below its fair value. If you look at it from before, the stock price dropped by more than 60%, which is a huge drop. So even though the actual performance is good, why did the stock price fall so much? And if this situation continues for a long time and then suddenly rebounds, is it because people are selling out of fear, or will it recover again following the earnings per share? It will recover following the earnings per share. First, it just fell even further. Second, why do so many people make this choice? My choice is number 1. Wonder when the data is saying that. That's why you make that judgment. The data here shows that earnings per share can also go in the opposite, downward direction. So naturally, it should be number 2. It's hard to predict in advance, so we must make judgments based on available data and the current situation. If you only look at the current data, the possibility of repeating scenario number 1 is very high, and if you ask what the model is based on, that's the answer. The structure of the economy needs to change, but when it comes to identifying those changes, it's when the points that actually affect the real world become stronger. Then it is clear that the possibility of a quick recovery is quite high. So in this part, I think it's important to check the points that directly affect supply and demand and keep monitoring them closely. The reason these parts have been delayed so much is because of the risk of inventory on this side. If you look at the list of movies I have, you will see that besides these movies, there are also some movies that are not well known on television and some that are only shown at festivals. It's called Mijucho, and if you look there, you'll find that we filmed a lot of content about how to avoid investment risks. Among them, the third video is about risk diversification. I think it would be good to watch that video as well. Even if a company has growth potential, if there is a valuation risk, the stock price can drop significantly, even with a slight market correction. In cases like Novo Nordisk stock, there was a valuation risk due to being considered overvalued. Now those valuations are being adjusted. The long-term earnings per share predictability is low. Expected sales growth is 29% this year, 31% next year, 16% and 20% in 2026, indicating high growth until 2026. However, the sales growth rate declines slightly in 2027. But the current stock price is not reflecting the 2027 level yet. Even if you look at the May 2025 or December 2025 and 2026 actuals, the stock price is moving along with those actuals. So if you look at the actuals for those periods, it's not that expensive. You could say it's a rapid growth stock, and compared to that, the stock price has risen quite a lot. That's how you can look at it. The valuation shows a significant drop in the risk premium compared to before. The light blue area indicates proximity to fair value. The actual performance continues to improve. Although the stock price is rising, exercise caution at high valuations and make adjustments. Be more careful at this level and more aggressive at low valuations. If the support holds, it usually remains at that level for some time. It bounced back after the first correction and stayed at the lowest undervalued line the second time. It stayed there because the support held, proving right twice. The index drops uniformly at first, but some parts had already fallen before the overall drop began. As the market rebounds, if the index keeps falling, it will continue this downward trend. The data for April 17, 2025 shows the stock price around $58, indicating it is still very undervalued. The current price range suggests the stock is awaiting a momentum shift, as if a turnaround is imminent. If you download the app, you can not only get this data, but premium members can also receive alerts whenever there is a buy or sell signal. We are developing the app to send alerts and notifications to all users, including free members, about news and events related to their interests. So I think it would be good if many of you download the app and use it. So if you buy the model as a last resort, after the stock model is released, this is the case that has continued until now. Recently, if you look at the short-term chart, you can see that the 5-day line is trying to cross above the 21-day line, showing a tendency to change direction. So the trend hasn't completely reversed yet. Right now, it's in a state where it's just holding the current level, and even though there are some buying attempts at the point where it seems certain to turn upward, the momentum isn't strong enough, so it's a bit of a cautious market situation. Because of that, there could be more volatility. Instead of predicting, watch for gradual changes. Even if you buy after an upward trend is confirmed, the valuation is still low. Carefully check, and there are still many industries with upside potential, even if you buy later. This seems like a good approach. Lastly, I will try to show you the robot disc by moving the initial screen. I can't turn the Nobonodis very well. Are you alive now? So right now the current situation is that Maimyo Shinho is coming out, but Meido Shinho hasn't come out for 125 months, so until now the new ship hasn't come out. From 125 months to now, it's been 65 months, so it's selling well during that period. The dividend hasn't come out except for the 3% tax, but it's been implemented as a long-term plan and hasn't been paid out until now. If it was a good company and you kept holding it at a low price, the profit could have easily doubled by 50%. So if you make good use of these trading techniques, it's good to use them as a reference for various stocks that you're interested in. Registering a stock you're interested in will provide notifications from premium members, keeping you informed about its performance. This stock went up right away after the buy signal, so you can refer to it and also check other stocks that people are interested in. I want to buy it, but Hyun is also interested. Let's share it.
That's how you make a judgment.
It's good if you use those things. If you look at the Bollinger Bands, you can see that the price was high here and then it dropped and stayed low for a while. The stock price has remained flat for a year and is not expected to rise immediately. The situation is similar here. At this point, it could rise or fall again, and the same could happen afterward. People say it's hard to predict, which is what they've been saying. If you look at the exponential moving average chart on the weekly chart, the lowest point is currently around $65. But if you look here, you can't see the stock price. If you look at the stock price, it's barely around $65. So, if you look at the exponential moving average chart on this side, you can see that this point is acting as support. So right now the 2-day line is at $65 and the 61 line is at $71. So currently the 5-day line and the 21-day line are all tangled together. So when you look at this, the moving average lines all converge into one value when the direction changes. Whether it goes up or down, the fact that the lines are converging means that the market is about to choose a direction. So it's likely to choose an upward direction. So since it's very low right now, personally, I think there's a possibility it could go up. But truthfully, I can't predict how long that momentum will last. But here, since the current $71 level is the 61 line, even if it's not stable, if the $71 level rebounds, and if it rises quite aggressively from the starting point, and if a lot of buying comes in, then there's definitely a possibility that good news could come out. So if you look at that point, it seems like a good thing. In the mid to long term, even now, there hasn't been any sign of a decline. But now the 21 line and the 61 line are staying pretty flat. Previously it was sloping down, but now if you look to the right, it's a bit more flat. If you look at it that way, it's not a signal that it's going to go straight up right away. It could go straight up like this, or it could drop one more time. Clearly, it's not guaranteed that it will go straight up from here, and it's not certain that it will only go up temporarily. In this area, the lowest current price could go up or down again. So overall, it's better to approach it with caution rather than being overly optimistic. The stock price earnings per share is here, and you can check it here as well. So if you look at the stock price earnings per share sales and these chart forecasts, you can keep updating the data. If you confirm this, it will be easier to see, and the momentum could be much better. Nobonodis, please take a look at several parts at once, check the news and these things carefully, and if you invest after doing so, I think it will be good. If this video helped, please comment, like and subscribe. Thanks!